Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 21st, 2025, and we're diving into the Q3 2025 earnings report of Wintrust Financial. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Wintrust Financial's latest performance.
Let's get started with an overview of Wintrust Financial. Known for its diversified financial services, Wintrust has been a significant player in the banking sector. Today, we'll explore their Q3 2025 earnings report and what it means for investors. Revenue and profitability overview. John, let's start with the revenue and profitability. Wintrust reported a record quarterly net income of $216.3 million. How did they achieve this?
Wintrust's strong performance is primarily driven by robust loan and deposit growth. Total loans increased to $52.1 billion, and deposits rose to $56.7 billion. Despite a slight dip in the net interest margin to 3.50%, the company's diversified product offerings have supported this growth.
That's impressive. How does their net interest margin compare to previous quarters?
The net interest margin decreased by 4 basis points from the previous quarter, but remains within their targeted range. This stability is crucial for maintaining profitability in a fluctuating interest rate environment.
EPS performance and analyst expectations. Moving on to earnings per share, Wintrust reported an adjusted EPS of $2.78, surpassing the forecast of $2.63 from 6 analysts. What contributed to this outperformance?
The adjusted EPS beat expectations due to strong operational performance and effective cost management. However, it's important to note that the EPS was impacted by one-time recognition of prior issuance costs related to redeemed preferred stock, which slightly reduced the net income available to common shareholders.
How significant were these one-time costs?
These costs amounted to 21 cents per diluted share, which is a notable factor in the EPS calculation. Despite this, the underlying business performance remains strong, as reflected in the adjusted EPS.
Operational efficiencies and future outlook. John, let's discuss operational efficiencies. Wintrust's efficiency ratio improved to 54.47%. What does this indicate about their cost management?
This improvement in the efficiency ratio suggests that Wintrust is effectively managing its expenses relative to income. Their return on equity stands at 11.58% and return on assets at 1.26%, both indicating strong operational performance.
Looking ahead, what is Wintrust's outlook for the remainder of 2025?
Wintrust expects to maintain a stable net interest margin and continue its balance sheet growth. Their hedging program has reduced interest rate sensitivity, positioning them well for sustained financial performance.
Key takeaways. In summary, Wintrust Financial has delivered a strong Q3 2025 performance with record net income and an EPS that beat analyst expectations. Their strategic focus on loan and deposit growth, coupled with effective cost management, has positioned them well for future success.
Absolutely. With a stable net interest margin and robust operational efficiencies, Wintrust is well prepared to navigate the current economic landscape.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Wintrust Financial's performance in the comments below.